Welcome to this webinar series, which is a part of the Investor Education and Awareness Initiative of Aditya Birla Sun Life Mutual Fund in association with Outlook Money. I am Nidhi Sinha, editor Outlook Money, and today our topic of discussion is reflections on 2023 and resolutions for 2024. A very happy new year to our audience. And before we start discussing the topic, let me first introduce our panelists who will join for this discussion today. First, I would like to welcome Mr. K.S. Rao, who's the head of Investor Education and Distribution Development of Aditya Birla Sun Life AMC. Mr. Rao's top priority is to take financial literacy and investor education to various demographic segments across geographies. He has spent about 2 decades in the mutual fund industry. Welcome, Mr. Rao.
Thank you.
We also have with us Mr. Amit Trivedi, who is an author, speaker, blogger, and trainer, and has more than 2 decades of experience in the capital markets. He has authored a number of books such as Riding the Roller Coaster and Money Wise Perspectives for Women. Welcome, Mr. Trivedi.
Thank you. Pleasure.
So, a very happy new year to the two panelists that we have here. To just give an introduction of the topic today, the new year, of course, gives us the opportunity to reflect on the year gone by, learn from our mistakes that we may have done in the past year, and prepare an action plan for the future and the next year. So, we are going to discuss these with the two panelists today to help you navigate your own finances and resolutions in this new year. So, starting with you, Mr. Rao, I'll start with a very basic question. What, according to you, were the main learnings from 2023?
Good morning, and thank you so much, Nidhi, for this webinar, and thanks to Amit to have here with Amit and myself, and wishing everyone a very happy 2024. And it's like over last 3 years, I think we are in the this webinar is becoming a customary for us to reflect the year gone by and pause for a while and prepare for the year which is we are entered now. And that way, it's always good. Each of us will have a different kind of learnings, whether it comes to our investments or to the personal life. But broadly, if we can look what we have learned in 2023, various aspects of it. I mean, I look at, I come from a business of AMC, asset management company. Probably I'll put under AMC bracket. The first learning I can say, the artificial intelligence, the most talked of AI, which has created a lot of news around. Because a year before, when we have this webinar, we were discussing about the conversations about year of resignations. And this year, unfortunately, started with a year of retrenchments, in 2023. And artificial intelligence was most talked about. And of course, chatbot, which has created a lot of buzz. And that's just beginning. And all of us need to equip and we need to keep ourselves upskilled day to day and be prepared for tomorrow to come. Means, your intelligence is to how best you can use the artificial intelligence. That's the way a world can evolve in terms of your ability to learn and ability to move on. Second part comes from the markets. And I remember your editorial in January 2023, and where it is mentioned about could be the year of equities, and incidentally it has proved to be the year of equities. And and that was a fantastic year to start. I remember on 1st January it was 61,000 is the Sensex levels, and from journey from 61 to maybe 72,000 plus now. I mean, and that's where we have a very good positive outcome. Of course, during the year we have seen volatility around, and Nifty during that time 18,000 plus, and today is almost at 22. I mean, journey was an upward trajectory, and we moved from seventh largest market in the world to the fifth largest market in the world. I mean, whether this will continue now, I think we need to look at what we need to reflect on it. Means there was a bull run, there is a bull rally, but which is supported by the robust growth, and the outperformance of India is definitely audible. And navigating, I mean, I always quote the book of Amit, when in the market navigation, I mean, there were opportunities, but there were uncertainties. Uncertainties have come from the various aspects. One was the elevated inflation, rising of the interest rates, and
Hmm.
the geopolitical tensions which have added. And the last but not the least, now the valuation concerns. Means a lot to learn on the markets. And that's where the learning says market may behave its own way. You do not have a control. What is the learning is that you can stick to your asset allocation, stay to your basics, and move on to it. And the last learning I can say on the, I said AMC, artificial intelligence markets. And the third one is again, Amit's favorite, it's the cricket, in the world of cricket. I mean, if I can look at the World Cup euphoria, all of us had a wonderful, success story on the league matches for India, and zero losses, but we have lost the finals. Similarly, when it comes to that in a personal life, sometimes don't go with the euphoria what you are winning, and you need to prepare. There could be a bigger loss. Similar to your investments, my 12 investments can go right like a league matches, but one investment can go wrong and take me away everything. Here comes, balancing yourself, balancing and sticking to the asset allocations. Don't go by the greed and fear. And probably your outlook can change when you read Outlook Money every month, and understand your perspective better. And the biggest lesson every year is, I mean, you can't control things, and you can't predict. All that you need to prepare, and prepare for yourself.
Great. Thank you for that perspective, Mr. Rao. And of course, very interesting points raised. AI is the future. Robo advisory is something that is coming up within personal finance. Also, it has a lot of significance for people to take on this new challenge. And of course, the markets have been in the news for most of 2023, very volatile. Started around 68 in March, April, went down to 58 or maybe slightly lower than that. And now the Sensex has reached a new peak, 70,000, crossed it, in fact. So, in this scenario, Mr. Trivedi, you have written a book, Riding the Roller Coaster. We really saw a roller coaster this year in a way. So, what is your advice for equity investors in such a scenario?
So first of all, very, very happy New Year to everybody. And thank you, both Outlook Money as well as Aditya Birla Sun Life Mutual Fund for this wonderful series of sessions, and inviting me for these sessions. It's always been a wonderful experience. When you talk about roller coaster, so I was just listening to what Rao sir was mentioning. Let me start with the third point that he mentioned, see cricket.
Hmm.
So while he talked about the roller coaster in the world, during the World Cup, where India was undefeated till the semi-finals, and the finals, Australia finally took the cup. But by the end of the year, we defeated Australia in a different format and through a different team. The women's team ended up defeating Australia by a huge margin. So the roller coaster actually 2023 was visible in multiple ways. So cricket was one. Interest rates was another example of roller coaster ride. The way the rates have moved was again unprecedented and unimaginable in most parts of the developed world, especially. We were a little less impacted as India as far as the interest rate movements were concerned, but the world was shaken up. And then, of course, the equity markets. Now, in one of the earlier episodes that we did, I think immediately post the COVID lockdown started, we had done the sessions where we had highlighted that 2010 to 2019, roughly a 10-year period, hardly saw any volatility in the stock markets. It was an uncharacteristic thing for equity markets, and suddenly 2020 started with huge volatility. And we've just witnessed that volatility to continue even till 2023. And the year, was another sort of exhibition of the nature of stock markets,
Hmm.
where there was tremendous volatility. And the Sensex, if we take that as a barometer, it went up from 60 to 70. And there was like, the 15, 18, whatever percentage kind of a growth in a year. It brings back the same point again. Equity is volatile. It has the potential to deliver superior returns over long term. But what happens during that long term is there is going to be a bumpy ride. There is going to be a prolonged period where you may not see good returns. And suddenly there could be 1 year or a 6 month period where suddenly the markets zoom, and that would compensate you for that entire long period that you waited, and the patience gets rewarded in this manner. If you expect the returns every month and the quarter and every year, that's not going to happen. Equity does not reward that way. But if you have the patience, if you have the wherewithal, then the rewards are almost sure. Now the question is, where do you get the patience from? And this patience comes or is required at two levels. One is the ability to wait financially, and second is the ability to wait psychologically. And that's why Rao sir mentioned about asset allocation. Rao sir mentioned about preparedness. And this preparedness is whatever short and medium term goals you have, don't rely on equity. Provide for those goals through other investment avenues. Provide for the short term contingencies or emergencies that may arise. And if you've done that, you automatically develop the financial ability to wait.
Hmm.
And the psychological ability to wait is where I'll draw from what Rao sir mentioned, or you also mentioned, that artificial intelligence is the future. But let's also not forget the natural human stupidity is also the reality. And I'm not ridiculing anybody, but that human stupidity or human inconsistency is a reality, and we all go through that. And in that process, if we build a plan, we lay down certain rules for managing our money, we create a process of managing money, and managing money would involve be prudent in taking debt, take enough insurance, maintain liquidity, and manage your investments. If we do these things, then these are good boundaries to play within, in spite of that natural human stupidity, and we will get protected against our own behavioral mistakes.
Those are very significant insights for our audience, and lots of takeaways from there. But we are talking about the markets, Mr. Trivedi. My next question is also to you, because 2024 is going to be that big year when we'll see the general elections. And usually, this is the time again when investors kind of are focused on the markets. There are, the writing on the wall is that the ruling party may come back. And of course, nobody can predict that for sure. But there is exuberance in the market, especially after, the BJP won 3 elections out of the 5 state elections. So in this scenario, we know that, the markets remain kind of volatile during the election season. But what is it that equity investors should really watch out for? And how should they behave in such a scenario? And this is especially for people who are focused on kind of the stock markets per se. So, what are your views on that?
My sense is that most of the times the euphoria before election or after election is often short lived.
Hmm.
Eventually, the nation's economy and the performance of companies within the country play a much bigger role in delivering returns in the stock market. So let me start with that line and now go back to two particular elections. One happened 15 years back and the other happened 20 years back. I'm, of course, referring to 2004 and 2019 union elections. In 2004, the BJP's alliance NDA was ruling at that point in time, and then the election happened. That time there was a euphoria. The entire India Shining campaign was being talked about. Right? On the day of the election result, the tables turned, NDA lost and UPA came to power. The market crashed on that day by 11%, a single day fall of 11%. Exactly 5 years later, UPA had done a reasonably good job in that 5-year period. The markets were high. UPA got majority again, but that day the markets crashed by 17%. Rose. The markets rose by 17% in a single day. And then after that, we had a 5-year period where the markets did not deliver any returns. Multiple reasons. And I'm not saying that it was about any political party. The global headwinds were against the economy and the market, because in 2008 and 9, we had the global financial crisis.
Right.
India, which was the India Shining stories a few years back, in 2013, the world talked about the fragile five, and India was one of those fragile 5 economies. The narratives suddenly changed, and when the talks about fragile 5 were at the highest, another rally began. Now, narratives keep changing. What did not change was the underlying economy continued to remain resilient throughout that crisis period, and that resilience allowed us to come out of the crisis. And when the economy comes out of the crisis, or when the narrative starts that we are about to come out of the crisis, the rally begins. And this is exactly what we talked about 2023 also in your first question, that this is the nature of the beast. And to that extent, a short-term trader may worry about elections, the results, the mood, etc., but a long-term investor should not. The long-term investor should look at a mega trend called India, which is today among the favorites of a lot of investors. And I'm not only talking about portfolio investors, I'm also talking about companies which are setting up operations out here.
Right.
Now, in that case, if we are looking at an economic growth to continue for next few decades, then I think long-term investors need not worry about whether their portfolios would earn decent returns in the long term or not. But in the short terms, be prepared for negative surprises, be prepared for positive surprises.
Sure. So, of course, the election year can throw surprises at every end, from the political spectrum to the markets and how they behave. But given the rising equity culture in India, especially youngsters taking to equity so much in the past few years, especially after COVID, what are some of the financial resolutions, Mr. Rao, that you would suggest for the younger generation for the upcoming year?
Yeah, thanks, Nidhi. I think I'll take it this forward from where Amit was talking about the future of India and economy. I mean, the youngsters, one great advantage, the generation Gen Next who are today, who are getting into the employment, are just into the employment. And next 25 years, when we call for an Amrit Kal for India, and they are at a right time, at a right place, all that what they need to do is the right things. You are right that right things could be a right resolutions. Probably before even the right resolutions, I'll say they need to follow, focus on the 3 Bs when it comes to the financials. The 3 Bs are, first, you can budget. Have you got your own budget? I mean, budgeting is the most important part. If you are not budgeting, then you end up here and there, then you are losing. The second focus is on your borrowings, because I have seen the generation who are pocket full of money, but they also opt in the apps. There is a provision called buy now, pay later. And I have seen some statistics from few of the fintechs where I'm part of the advisory. And most of these youngsters, they end up paying the late payment fees because it's a buy now, pay later, and they never stick to it. And I keep guiding these guys. The moment you opt for BNPL, and in my generation, I've seen a lot of BPL, below poverty line. And if you opt for BNPL, then that N will get off and you will get into the BPL. Please don't do it. That's your borrowings. Be choosy. And the third B is the most important, is the building your future. How you can build your future is with the right financial goals. What kind of financial goals? I think generation is different, and each of them are very different. And what kind of goals they can have. Earlier we spoke about artificial intelligence, and I'm not very sure, their career, current profile. I mean, there is one study done by one of the HR consultants, which says 18 to 24 months you may have to shift your profile from one to the other profile. Means you need to upskill yourself. Then you need to have a fund. My financial goal for me when I started my career, the retirement goal is the first goal. For them, more than the retirement goal, upskilling myself and getting ready for the next role could be your goal. Then are you ready with it? Then for that, the purpose is, I think, in the previous webinars we spoke about build yourself a good emergency fund and build yourself a good learning fund and upskilling fund. That could be one of the good resolutions you can. And another resolution is save as much as you can. That's a better way. I mean, how much you can how much you can save. And the third, and the one is, most of the times I have seen the generation next, especially in my office, I look at them, they plan for their taxes at the last minute. Probably look at your tax planning in a very different way, and you end up on a wrong planning side. The tax planning can become an efficient tool for you. And put it, if I want to put it into your resolutions, probably put it as a best resolution, BEST. But I mean, the first B is your budgets, your borrowings, and your building future for finances. Second is the emergency fund, whether you have that emergency fund right. Third is save appropriately or save as much as you can. Fourth is the tax planning is the most important part, so that you this tax, if you plan for taxes, that itself can be a huge wealth creation at a later part of life. And how you are planning it. Of course, within that, ensure your health insurance, your life insurance, and your investments. That's a part and parcel.
Absolutely. So, of course, that age is again very, very critical, because that is when you have the opportunity to lay the foundation of building a secure future for yourself and your life and your family. But while we are talking about the younger ones, I also wanted to ask Mr. Trivedi, what are the financial resolutions that the older ones can take? Now, Outlook Money is already running this campaign and coming out with an event on retirement, where we are focusing that if you are 35 plus or 40, definitely one of your goals should be retirement planning. And if it hasn't started, one of the resolutions should be to start that. But that was Outlook Money. What are your views? What are the main things that people in this age cohort should really focus on?
Nidhi, brilliant question. I think the resolutions are for us to do, because I'll just connect it to the previous question you asked me. The markets don't follow any calendars.
Right.
Markets follow their own respective timelines. It is for us to put it in our own calendar, and that our own calendar guides our own behavior and our own actions. So, what Mr. Rao was mentioning about tax planning is such an appropriate point. When I was 25, I used to wait for January to think about tax planning. And by February or March, when I found out what investment avenue to choose to save my taxes, the TDS was so much that I had nothing left to invest. Right? So that was a typical problem. The wisdom came 15 years later. Right? But at 25, I was also in the same boat that Mr. Rao was describing about some of his younger colleagues in the office. Just a small clarification out here. This particular show that we are doing is in January, which is the beginning of the calendar year. For tax planning, the financial year must be considered. So you start your tax planning in April. But for 2023-24, if you've not done it so far, then immediately after listening to this show, please take steps. You still have that much extra time. Don't wait till 15th of March. This
Right.
is number one. Now, this applies to anybody irrespective of the age. The second point, what Rao sir was mentioning about this BNPL. Now, BNPL feeds to the instant gratification need of humans. I get that stuff right now, and the pain of paying comes much later. But be careful. And this is one resolution that each one should take. And I'll link it to the retirement planning also a little later. But this is another resolution you take: borrow responsibly. Otherwise, this BNPL can either lead to BPL that Rao sir was mentioning, or it could just expand into another slightly longer acronym, BNPTNL. Buy now, pay through the nose later. The cost of borrowing, if not managed properly, can compound. And in the world of investing, the benefit of compounding that we talk about, in the world of borrowing, the same compounding works against the borrower and in the benefit of the lender. So be very responsible when you borrow, because if that cost goes out of hand, then the retirement would suffer. Retirement is often considered to be a long-term goal. Long-term goal is only long-term in terms of timeline, not in terms of planning. It is not a goal where your planning gets delayed simply because the goal is far off. The earlier you start, the better you would be in achieving those goals at a lower investment. The cost of delay could kill most families. A few years back, one of the leading newspapers carried a survey, and that was because the edition was a Bombay edition. It only talked about Maharashtra, and it said that 40% of people above 60 years of age are working for their survival. It was not they were working out of choice, but if they did not work, they could not survive. And that's a very sorry state of affair. At 60, you are healthy, you want to work, it's always welcome. But if you are forced to work because of financial or economic reasons, that's not a desirable state. And that's why pay enough attention to retirement goal should be one of the top resolutions. And this should be one of the top resolutions, not for people who are 50 plus. It should be one of the top resolutions for people of any age who started working and earning. Because it's like, death is guaranteed if you are born. Similarly, retirement is guaranteed if you start working. So anybody and everybody who starts working must keep retirement goal in mind. So this is one big resolution that I would keep in mind. And that's why generally, and again, kudos to you all, you are doing this retirement planning conclave, highlighting the importance of that goal. Start with retirement planning as your goal. This long-term goal can only be achieved if you've taken care of the short and medium-term requirements.
Right.
And from that point of view, if you focus on the retirement goal, you would definitely pay attention to everything that comes in between. And from that point of view, it allows one to think holistically. Right? So resolution number 2. So resolution number 1, of course, borrow responsibility. The resolution number 2 is keep retirement planning in mind. And then resolution number 3, don't think that this choice is between enjoying life or living frugally. These are not the options. The options are living a good life today and living a good life tomorrow. These are the options, and one got to balance between these two. So don't kill yourself today for a better life in retirement. That's not the idea. The idea is decide what kind of life you want to live today, decide what kind of life you want to live tomorrow, decide what kind of life you want to live in retirement, and prepare a plan accordingly. At the end of the day, a life in enjoyment is a life that is fulfilling. And the role of money is to enable you to live that fulfilled life. And consider this as the resolution.
Okay. Those were very interesting resolutions from both Mr. Rao and Mr. Trivedi for the younger as well as older individuals. Of course, there are many things that apply to both the age cohorts, and I hope these kind of resolutions, they will really help you, help our audience make their own resolutions for the year 2024. But to end this session, before we end this session, in fact, Mr. Rao, I would like you to kind of sum up the investing strategy and the life strategy that people should really look at in 2024.
Thank you so much, Nidhi, for it. Amit, it was just amazing as always. Your extended acronym I like the most. And coming back on the resolutions, earlier when we discussed, when we are looking at reflections, probably today when markets we are looking at, since you said, Nidhi, it's a year of elections, and also we have seen reasonable growth. Probably there is a possibility of slower growth. We need to anticipate that, and there could be the situation, the liquidity which we have today may or may not be, and interest rate cycle will look at on the southwards. It may start looking for the southwards, and looking at all, there is a future rate cut possibility, and how people can look at is probably when you have a right financial advisor and right financial goals, you can have that right asset allocation. But coming to the theme which we have today, if we have to look at the resolutions, and I always believe sticking to those basics. Most of the times year may change, but resolutions remains the same. And for me, it is like the resolution number for one for me is sticking to your own financial goals. That's the first thing. And the second is markets, whichever the direction it will go, your asset allocation will play a vital role. Then optimizing your asset allocation is the resolution number 2. And 3 is irrespective of where you are, whichever the year, one we need to write on the wall. Those who are successful are the people who always remain disciplined. Resolution number 3. And resolution number 4 is we have seen COVID times to till date. Those who have an emergency fund, irrespective of what happens, they don't look at volatility as an enemy, but volatility as a friend. Build your good emergency fund. And resolution 5 is there is a wave, there is a moment of SIPs which is happening in the industry. Probably, whichever the way market goes up or down, continue with the SIPs, don't discontinue. Probably if market goes down, you can have a step up your SIP rather than reducing or cutting short of your SIP. And the resolution number 6 is always, you have surplus, just try. There are fantastic mutual funds with the liquid funds, invest your surplus in liquid funds. And then resolution number 7 is we ignore health insurance most often, and life insurance we take as a priority. Please do have an health insurance, of course, and life insurance. And resolution 8, I think Amit was telling earlier, a reduction of your debt is the most important part of it in life. If you want to accomplish financial freedom, financial independence, debt plays a vital role. Don't keep a burden of the debt. Try to minimize as you grow, as you go up. Probably in the 40 after 40, you will be discussing on that. In fact, other day when I was talking to your colleagues, Nidhi, on the 40 after 40, if people have to party after 40 and 2040, they need to reduce the debt. That's the most important part of it. And the ninth resolution is investing is fantastic, but in the financial investments, but investing in self is equally important and the most important. And the last but not the least, the 10th resolution is the consult your financial advisor, financial coach. Probably, reading Outlook itself can be your financial coach, because while reading that book will work as a companion to you. In fact, that book, if you can take as a companion, I keep telling my my coaches on the when I do this year-end resolution coaching, that we do this exercise called visualization, and affirmations and visualizations will play a vital role in manifestation. And I keep telling them, your future is coded with the loaded words, and what you need to do is code your what you want to accomplish with the right words, and so that loaded with a visualization, and then you can manifest what you want to have. And reflections and resolutions will play a very vital role. I mean, not only have your outlook for money or outlook money, but outlook for yourself, that will change the way. And wishing everyone a very prosperous financial year. And it is going to be, if somebody is looking at Chinese way of predictions, this is a year which is called Year of Dragon. And Year of Dragon is always considered as a potential for the prosperity. And potential you can unleash when only you participate. If you are not participating, you can't unleash the potential. Participate in the Indian economy, participate in Indian investments, and participate in your own self.
Great.
Thank you so much.
Thank you so much, Mr. Rao,
Fantastic.
for summing this conversation up so comprehensively and giving these 10 takeaways that our audience can really practice and consider for their lives in 2024. Thank you for this session, Mr. Rao and Mr. Trivedi, and to our audience, a very happy new year.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.